Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, October the 16th. The year's 2023. Let's talk trading. Trading stories we tell ourselves. Fobo with Walmal. These videos are for educational purposes only. Your results may differ from mine. I gave my take on Fobo, which is fear of better option. So today, Walmal is going to give you his take on it.
Yeah, so Fobo, it's funny because Fobo and FOMO are very, very similar to each other. In fact, if I recall correctly from way back when a lot of these terms were coined, the same fellow who came out with who is accredited to coming out with FOMO, or fear of missing out, he also came out at the same time of Fobo, or fear of better options. And his claim was that the two of them are kind of intertwined with each other. And he goes all the way back to caveman days, and his whole idea is that the fear of missing out. You're sitting out there, you're sitting in your cave, you're hungry, you're looking out on the field, and you see the opportunity to take down something that could be good and plenty to eat, but and then the other option comes along or the other thought that comes to the brain at the same time is Fobo, fear of a better option. And then what happens is your brain starts to think, okay, I'm going to expend all this energy to go and get that, whatever that is. And now we got this situation of, but I've seen better out here, and because I've seen better out here, do I really want to go and expend all my energy here, or do I want to wait and then wait for that better opportunity to come along? And it's funny because I know a lot of folks that may not like this or whatever, but I'm not as much as it was at one point in time. But I used to love hunting. I still do it from time to time, meaning at least once a year. And as I've gotten older, my hunting style has changed from in the beginning, as a little kid, I was just excited to be able to go and take down whatever prey I was going to take down, and be able to go and present to my mom. Hey, look what I did. I brought this down, and we're gonna have meat for the next 2 weeks or whatever. And to now where it's sort of like I sit there and I wait, and it's like, nope, I'm not going to go and waste my energy on that. There's better options out there, and more times than not, what happens to me now is I'll sit out there in the woods, and I wind up bringing home absolutely nothing because I'm constantly waiting for that next option to come along that's better. And so, is that better? I don't know, because the reality is, I didn't have to expend any energy, didn't expend any resources, but I also didn't come home with anything. And so, you got to go and figure out who you are as a trader. I think that we're going to bring this back to trading. The two technical psychological terms for it is maximizers and satisfiers. A maximizer is a person that just goes out there and he's just going to, he's only thing he's going to take down, the only trades he's going to go and take are the ones where he can, get, a million pips off the trade, obviously exaggeration. Or the satisfier is the one that says, okay, I'm just going to go out there and I'm going to take my trades, and I'm just going to go and take them. And if I get 1 pip on it, or I get 5 pips on it, I'm happy. I did great, and I'm just going to go and move on. And so you're a satisfier. The problem with satisfiers is that as soon as you get whatever you're looking to get, you're out, and you miss out on bigger opportunities. But generally speaking, they also, if they've got their headspace together correctly, they also are looking at, well, that's okay, that's not my trade. That's where their headspace is. A maximizer, on the other hand, they're as psychologists will put it out there, they're sitting there, it's like, okay, I'm only taking these better trades, and then when, quote unquote, the better trade comes along, they go and take it, and a lot of times they'll go and get that good big pit move, and for instance, with my style of trading, 5, 10, 5, 10 pips, you know. But the problem for them is that when it just doesn't work out and they only walk away with a pip or two, they get very, very dejected. Or worse than that, they go and get out early because of some other fear that comes across the table for them that emotionally takes them out of the trade. And then, of course, the trade goes and does exactly what they thought it was going to do. And now they left 10 pips on the table. And now they're like, oh, crap, look what I've done. You know, and they start beating themselves up. So there are advantages to both. There are disadvantages to both. You know, we as traders have to figure out what fits into our type of trading, our mindset, and that, you know, and what we're going to do well with. Some traders are, you know, are great at maximizers. Other traders are great satisfiers. You have to figure out who you are as a person. You know, and I say this all the time, and I know T-Row, you can back this up. You know, I say all the time that you as a trader have to figure out who you are. You know, I can't figure it out. T-Row can't figure it out. You know, your wife can't even figure it out, or your husband can't, or whoever your partner is can't figure it out. It's not them to figure it out. It's only you. Because you're the only one that's got the mouse in your hand. You can go and push the button. You're the only one that's done the research. You're the only one that's gone in and figured out what you're going to do, figured out what method you're going to use, figured out what your risk reward is going to be, figured out what your money management is going to be. You're the only person that can go and do it. You're the only person that did that, and therefore you're the only person that can figure out what type of trader you are. That all said, you better find out what type of trader you are. You better figure out if you're a maximizer or a satisfier, you know, and that way you can deal with this whole fear of better options. Because if you don't, what's going to happen is you're going to put yourself into a position of, you know, being fearful that you know, there's always a better option out there. There's always a better option out there. And the next thing you know, you've never ever taken a trade. And then what happens is, oh shoot, it's the end of the day. I haven't made a single penny, and now I got to get into a trade. And now you start taking bad trades because you feel, you know, this situation where, you know, I've now been backed into a corner, and I need to go and make my lunch money. And you wind up, instead of taking a trade that's really in your trading plan, you can wind up taking some other nonsense trade, and then you really pay for it.
Yeah.
So that's my 2 cents on the whole deal.
Yeah. Now, one thing I would disagree with, you know, FOMO and Fobo are actually, they don't cause you to do the same thing. A FOMO, fear of missing out, will cause you to get in a trade when you probably shouldn't. But Fobo, fear of a better option, will, you know, keep you out of a trade you probably should have gotten in. Because one is like, you know what, I better do this now because, you know, something else, this, I don't want to miss out. And the other one is like, no, I'm going to wait because I think there's a better option coming up. So
Yeah. Well, James McGinnis, what he was saying when he developed the theory, he was basically saying that the fear of missing out comes first, okay? And then what happens is, as you miss out, then FOMO usually is something that goes and comes from that. It's the next logical step that comes out of it, because then what happens is a lot of folks, what they'll do is once they've missed out, they go and start justifying themselves. Well, I missed out because there's a better option out there, and then it turns into this lifelong deal of just, you know, waiting for better options and getting, you know, as we always go and say, you know, analysis to paralysis, or paralysis by analysis.
right.
You know, and that was his theory anyway. But you know what? He's got the PhD. I don't.
Yeah.
Yeah. So, you know, and the thing is, they're just ideas, they're just theories. You know, but the thing is, you know, we've been talking about this whole thing for the last month or so. You know, stories we tell ourselves, and this is just a story that's out there that maybe we can use to be helpful for ourselves. You know, a story that, hey, you know what? That matches up with my life story, what I do. And I say that because, you know, generally speaking, what I've seen in my life is that in my personal life and in lives of friends of mine who I'm pretty close to, who who do different things, whether it be in business or trading. It's sort of the same things that you tend to do in your life tend to mimic the things that you do in your business life. Only I would say that they're exaggerated. And they're exaggerated because I think there's something very, very important that's involved there. And it's that thing called money.
Mm.
Money tends to exaggerate things. Or at least that's what I picked up throughout life.
Yeah, it definitely is a mind altering.
Yeah, I mean, I've seen great friendships end because of money. Over when you look at it, it really. I saw two friends break up where they stopped being friends and really held a grudge with each other over an amount of money that for both of them would be pocket change. And it just shows you what money can go and do and how powerful and alluring money can be. And because of that, we got to be very, very careful. And that's why that money management becomes so important because, if you can go and have a lifelong friend and lose that friendship over, again, pocket change. In other words, when I say pocket change, the amount of money you would spend on going out for dinner, okay? And the thing is, you're willing to go and throw away a lifetime of that over that amount of money. Man, think about what taking a trade and getting doused on it pretty bad. It can certainly mess up your your trading ability. So
Yeah.
you have to be very careful. So,
But maybe it wasn't the money, maybe it was the principle.
well, and you're right, very well. And I'm sure it was, and I'm sure on both sides. The relationship that I'm thinking about, I haven't talked to both these guys. They're both of them. It's the principle.
Yeah.
That's the funny part about it. It's a good point that you bring up, though. The principle of the deal, and in the sense that why do we not get out of losing trades sometimes? I think there may be an idea of principle there. I am not wrong here. How dare you, Mr. Market, go against me? And we start doing silly and so stupid things, and we start adding on where we shouldn't add on, and averaging in where we shouldn't average in, and instead of just going and saying, you know what, that's my lunch money that's gone out the door. But if I get rid of this, I can go and trade for the rest of the day, and continue on and just take it on the chin.
Yeah. Hey, no, it's funny. Somebody had asked me about revenge trading, and I told them I usually, I don't. But there is one time where I will do a revenge trade. Like if I tried to pop out of a trade for a pip or less, and then it slipped me, I will try and jump right back in and get that pip back. Because
Yeah,
I'm
and
just,
I think
yeah.
we all do that. Unfortunately, we shouldn't, but we do. Yeah, you've caught me doing that on several occasions, and for full transparency, viewers, I've caught Tiro doing it on a couple of occasions too.
Oh yeah, yeah.
It's just who we are, and unfortunately, we shouldn't do that. But and I know we're a little bit off topic, but does that play back into this whole thing of fear again, or anger? Because fear can turn into anger so quickly.
Yeah, and you know what? The fastest 15 minutes in trading is just about over. And yes, fellow traders, I did not put out a weekly opening gap video. Time got away. I was watching something on TV. So by the time I saw it, it was just like, nope, that's a little on the late side. But let's see. We have a couple of gaps that have not filled. The pound filled its gap. It gapped up. So let me know, or let us know, if you ever experience or go through that fear of better option that keep you from trading. Because It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.